Welcome back to Pumped On Properties October Property Market Update, where we break down all of the key news and all of the key performance indicators around the entire country to provide you all with a little pulse check as to how the Australian property market is performing. Let's get stuck into it. Now, we always kick these videos off with the monthly capital growth rates. Now, every single capital city in Australia has increased over the month of September, with Darwin once again being Australia's top performing capital city at the moment, up by 1.7%. Now, Darwin is absolutely on a tear right now. It's been performing super well over the last 12 months, also being Australia's top performing market in the last year. If we look elsewhere, Perth up 1.6%, Brisbane up 1.2%, Adelaide up 0.9%, Melbourne up 0.5%, Sydney up 0.8%. So everywhere around the country is doing extremely well right now. Outside of Hobart, just up 0.1% over the month. We're now seeing every single capital city in Australia in the green over the last 12 months. As I mentioned, Darwin leading the charge, up almost 13% over the last 12 months. Brisbane, second best performing market at the moment, up 8.8%, absolutely crushing it. I know there's some specific suburbs in Brisbane that are absolutely smashing that, more than double that growth rate over the last 12 months. Perth still performing really well, as is Adelaide, and Melbourne absolutely making that resurgence as expected. Now, the Australian property market just cannot buck this trend of low vacancy rates. There is nowhere near enough supply around the country from a rental property perspective. Every single capital city in the country has a vacancy rate below 2%, indicating that every single capital city is undersupplied right now. Hobart and Darwin, with the vacancy rate sitting at just 0.5% right now, is chronically undersupplied. We are starting to see rents increase across the board as well at the moment, according to Cotality. So these things are putting more and more pressure on renters, and obviously that is helping property investors because we've got rising rents, declining interest rates, a nice perfect storm to generate more cash flow. Now, the week ending 5th of October, we saw auction clearance rates at very, very high levels across the board, which actually blew my mind because generally on the back end of school holidays and over the long weekend, we don't see auction clearance rates that high during the spring selling season, but every single capital city had an auction clearance rate above 70%, which is a really strong clearance rate. Brisbane was just below that at 69.3%, so I should point that out. We do know that Brisbane isn't a huge market for auctions, and that's being shown in the data today as well. As we shift our focus to consumer confidence, which is just giving us a little bit of an idea, a little bit of an understanding as to how people are feeling in the economy at the moment, it actually dropped over the previous month according to Trading Economics, down to 92.1, down from 95.4. So this is still pretty low levels. During the GFC, way back in 2008, 2010 here in Australia, we saw those readings in the mid 80s. So less than 10 points above that point in time right now. I think there is a little bit of fear in the markets, and it's a bit of a confusing one because when you look at the data points, things are looking really strong right now. But when you look at the consumer confidence, it's not looking so strong at the moment. Unemployment rates are still sitting super low at the moment, sitting at 4.3%, knowing that the long-term average between 1978 and 2024 was about 6.62%. So compared to the longer-term averages, we're clearly seeing low unemployment rates in the country right now. It's really nice to see this number stay at a low level, even though we are letting a whole bunch of new people into the country at the moment. I was listening to an article recently, and they indicated that up until August of 2025, they had let in over 300,000 people to the country. Obviously, a lot of these people may be students, but a lot of these people are obviously seeking employment and are able to go out there and get a job with the low unemployment rates at the moment. Now, of the 100% of property purchases at the moment, just 62% are for owner-occupiers, with 38% going to investors. So seeing that percentage of investors tracking around the 35 to 40% range for quite some time now. So we're seeing a lot of investor activity around the country. We know in Brisbane, Perth, Darwin and Melbourne, there is a lot of pressure from those investors. Obviously, people wanting to get into the property market because there's been so many stimulus packages that have been rolled out. People are obviously getting that FOMO. They're seeing property prices increase across the board and they're wanting to get out there and buy something. And so for those who may have been owner occupiers, cannot afford to buy where they want to be living right now, so they're choosing to invest where they can afford so they can still get something in the market and expose themselves to these capital growth rates that are going up across the board at the moment. There's been no changes to interest rates over the previous month, with the average rate staying at 6.99%. I do feel as though this is quite high at the moment. I recently sat down with my mortgage broker and I'm currently sitting at an interest rate of about 5.6% on my owner-occupied residence and about 5.9% on my investment properties. And he indicated that there are some banks out there that are willing to loan at about 5.4% interest-only investment loan right now. So obviously this indicates that the banks do believe that there's further rate cuts coming in the near future, and they're already pricing that in and passing it on to investors that are willing to move things around, refinance, get their properties with a different bank to get that lower interest rate. At the end of the day, it is just a business decision. And if you've got a large property portfolio or millions of dollars worth of debt, a small 0.2 or 0.5% decrease in your interest rate can result in thousands of dollars of savings over the financial year. Now, something that we're not used to seeing at this time of the year is the total number of listings across Australia has actually decreased, albeit by a marginal 4.8%. It's still quite odd to see these readings because we're now in the full swing of spring selling season, where typically we do see listings increase through the month of October and sometimes into November as well. So it's really interesting to see that this number is actually decreasing at the moment, once again causing those supply issues, not just from a rental perspective, but also from a property listings perspective. And with the amount of demand, with the amount of people trying to buy properties at the moment, it's not ideal to see those listings decrease. To couple that in with distress listings, another positive factor is distress listings remain 27% lower year on year according to SQM. So there is nobody really selling in these distress conditions at the moment, and that makes sense when we look at the annual growth numbers, when we look at the monthly growth numbers, and we know that we're in this interest rate declining cycle. And when you look at the data coming out from Cotality, most properties are selling for a profit in Australia. I think Brisbane's been the top performer for over 12 months with over 99% of properties selling for a profit at the moment. It's really nice to see that number at a high level at the moment. Now, as always, we like to wrap this video up with some positive news. And I think the biggest piece of positive news for Australian property investors is the announcement from the Albanese government that the First Home Owners Grant has been rolled out as of the 1st of October. Now, what this means is first home buyers will be able to go out there with a 5% deposit and purchase their first home with the government-backed guarantee scheme. They've also increased the thresholds across the country as well to make the entry prices a little bit more in alignment with the median house prices for the capitals around the country. This is going to really stimulate the economy. This is really going to stimulate the property market. I know we've seen in our business a huge increase in the amount of people reaching out, trying to get into the property market before these things get rolled out. Now it's been rolled out, we do have a little bit more demand. I believe that we've seen property prices absolutely smash the monthly growth rates that we're seeing in the data in particular locations, down in Logan, out in Ipswich, up in far north Moreton Bay, and down in Redland Bay right now. We've seen property prices go up by over $100,000 in less than 3 months, which is putting a lot of pressure on property prices and property buyers in the market at the moment. And this month's gold nugget, which is something else that we've seen in the market recently that's really positive. It was from a video from Phil Anderson where he was sort of breaking down where we're at in the real estate cycle at the moment and what is expected to come. And based on his analysis, based on his research, he believes that this cycle is going to continue to run until at least 2027 in the United States, knowing that Australia is 3 to 12 months behind that, meaning that it's looking like the rest of 2025 should be a great year in Australia, as well as 2026. And 2027 is now shaping up to be a great year in Australia. So for all of those who's been thinking about getting into the market, I think there is a lot of pressure, a lot of demand mounting at the moment, and that's resulting in above average capital growth rates across the board right now. So it's time to go out there and talk to your broker, see what it is out there. But at the end of the day, we just want to bring this information to you, keep your finger on the pulse, have an idea as to what's going on around the country so that you can go out there and make an educated decision.
G'day guys, my name's Ben and I'm the director here at Pumped on Property, and I just want to say a massive thank you for watching our content today. Now, if you're thinking about buying an investment property in the next 3 to 12 months, then the team and I would love to offer you a one-on-one strategy session. In that session, we can talk about exactly where you are right now, where you'd like to be longer term, and we can deeply educate you on the Australian market. And then you can take that information and go and absolutely smash it on your own, or potentially become one of the small number of clients that we work with each week. To book your session, all you have to do is go to www.pumpedonproperty.com and click that book your free strategy session button. But either way, we wish you all the best on your journey as an investor to financial freedom.